Right, so let's head on to the breakdown of gold using the supply and demand concept. Using the concept of supply and demand, let's just look at gold. Gold, applying the concept of supply and demand. Let's look from 2020. Let's look from 2020 gold, applying the concept of supply and demand. Right, so this demand here, this was a demand that was going to work in the future. Let's just mark it and leave it like that. That's a demand zone. Market pushed, uh, demand zone as well, as you can see. So the market structure here was bullish this entire time. Market structure was bullish, so here it respected this one. That demand zone is the one that was respected, as you can see. Then the market went up. From there, as it was going up, we look at the supply zone at the top there. Supply zone at the top, it was broken, retested, broken, retested. Market went all the way. This was the buy that one could have taken advantage of. Then this sells inside, one could have taken them. Target was this demand zone here. Market went back outside the demand zone because it was still on a still forming higher lows, which is higher low, higher low. So meaning it still had to go up further. Broke the supply zone, retested a bit, then went all the way. Went all the way, all the way, all the way. So as it was going, you just need to observe your levels of demand and supply. Once you get your demand or your supply, you simply can enter using that. Then so this is what I'm seeing. This is what I'm seeing at the top there. Supply zone, at the bottom demand zone here at the bottom. Right, in between these major supply and demand, we also had this supply here. Market came back to test, went all the way. Same as here, also this demand here. Market was reached. From supply to demand, target was reached. From there, manipulated our demand, then went back on top. We could have taken buys. These buys targeting obviously these highs as well. Market broke our demand zone. Once our demand zone is broken and retested like this, we are targeting now to look to the left, which was with a certain level of support here. So you actually can now see that support and resistance is different from supply and demand. It's very different in a huge way. Support and resistance is very different from supply and demand. So if you check now, after doing that, went above, you would have bought, went down, played around, it was ranging in this zone. So here one could have gotten, especially this trade here, broke retest. This was a good one could have taken the trade there, buy there, hold all the way, first target, second target there. Then from this supply zone here that we're having, and this supply zone broken, retested, as you can see, retested this supply zone, one could have taken sales from this supply all the way to this major demand zone here, there to there. Then this range broke, retest, one could have taken sales here as well on this supply zone. So now we are at a demand zone. At a demand zone, what do we expect? We expect buys. So now that's when we can actually go to lower time frames to look for confirmations of buys using our concept of supply and demand. Meaning, if ever we check buys, we are looking forward either for the market to come back to this level of supply. So every concept, there's no concept that works alone on its own. Every concept, they work the best when they are working hand in hand with other concepts. So here you can also put a trend line. The market can come to this trend line and continue selling because there's no much guarantee that it's going to change structure as yet. So I have this supply zone there. I can call it a mini supply zone. that the market can reach to. The market can come all the way to that supply zone, maybe start selling from that zone there. So whenever you go to lower time frames, the 4 hour, the 1 hour, you're simply doing the same thing that we have been doing on the daily, identifying your demand and your supply zones. Once you identify that, you're good to go. This is my supply zone there, never tested. Then here we are at a major demand zone. As you can see, major demand zone, major demand zone. The market is pushing to the upside from that major demand zone. As you can see, already we can see some formation of higher highs examples there. And we also have this resistance here. So once that resistance is broken, most probably one can actually enter some buying opportunities on gold. Buying opportunities can actually be entered once we break above this resistance here. Those buying opportunities you're targeting this supply zone, or just in case this one as well, right? So what I do, TP1, TP2 here. That is my expectation. But however, if we break to the downside and we break this demand zone, we are looking forward to the next demand zone as our target. But meanwhile, this is the scenario. Once we break this resistance, buys can be taken all the way to here and that level. So guys, this is how you apply the concept of supply and demand to any instrument that you want. This is how you apply the concept of supply and demand. Any instrument that you want, it works on any instrument of your choice. It definitely works just using supply and demand. So guys, meet you on the next episode as we are going to talk about a different instrument and we do a back test of the instrument. So make sure that you're subscribed, make sure you like, make sure you share, and you share with us your comments as well. How are you of how are you seeing this strategy of supply and demand? How are you seeing our content here on this channel? See you guys on the next episode.